YouTube, and welcome to another video. It's late on a Saturday, so I'm gonna have to be speaking with quiet tones because the kids are asleep. I just had to get this video out of my system. So this is gonna be a Saturday study, which I hope to do every Saturday and broadcast here on YouTube, so that I always welcome your feedback. I've already got some useful feedback from one viewer, and so I'm going to continue to share and work this problem out of my system. So this is what we have. This is the last 6 months of data. I've blanked out, hopefully, if I remember to do it, blanked out my actual numbers so that we can focus on, rather than profit and loss in dollars, we focus on ratios. So I had, over the past 6 months, I've had a 99.1% return on per contract, and that is, when I say per contract, I mean per $3,000, because each contract needs $3,000 according to my system and risk tolerance and the system's metrics. So this is the risk to reward, 2.28 or 2.29 when rounded up. And bearing in mind this is over the whole 6 month period. So 2.29, 35% win rate. Those are the number of wins and losses. And then this is the important number, the expectancy with the trade number of trades. So that is the whole time, and we're going to call this period, for the sake of this video, period A. Then we have period B, and that should be, that's not right, that should be here, from the 17th of November to the 11th of December. So meaning I've just put Sunday, the 11th of December, even if there's no trading. So basically from the 17th of November to the present, this is the massive increase in expectancy. We're going to call this period period B. And we have a slightly lowered risk to reward, 2.81, but a significantly increased win rate. So that's where the increased expectancy came from. And then I've divided period B into two more periods, part 1 and part 2, because we're going to talk about what I've done differently in order to get the different results between part 1 and part 2. So part 1 has an even greater expectancy. So you're expected to return over 1 times your risk per trade, which is unusual in terms of expectancy, at least in what I've seen going around the internet and in my own 10 years of experience. 58% win rate, huge risk to reward for such a high win rate, and that's the number. So that's period, that's part 1 of period A. And then if we go to part 2 of period, no, sorry, not period A, part 1 of period B. So before, at the beginning of the video, the whole sample size is period A. The second piece I showed you is period B, and then we've subdivided that into 2 parts, part 1 and part 2. So this is part 2 of period B coming up. And that is right there, from the 29th of November to present. 12 trades, so just 1 more, I believe, than part 1 of period B. But you can see slightly less than 1 to 2 risk to reward, so 1.94 reward for your risk, and a dismal 33.33 win rate, so 1 out of 3. And you can see that reflected in the numbers here. So I've essentially, if it were 2, then you'd break even, and all of this is after commissions, net of commissions. So I've got a barely negative expectancy there, and this has been from the 29th of November to present. As I spoke about in the last video, I made a withdrawal on the 28th. So this is the result after the withdrawal, and this is the result pre-withdrawal. That's part 1, and then part 1 and part 2 combined, i.e. period B, is this period that is both before and after the withdrawal. So it's still better than the last 5 months, the 5 months prior to this period of trading. But it's concerning that the withdrawal has had such an effect. So let's see, pull over this notes for vid that I've got here. What did I do differently in part 1, which I'll just put on the screen here. Part 1, that's that, compared to part 2, which is essentially break even. The first thing I did is I got up early. I say early, it's quite late for most people, but I'll probably do another video on why that's early for me. So that means being at my computer by between 9 and 10 o'clock in the morning. Aiming to get to my computer no later than 10 o'clock in the morning here in Central European time, here in Italy. When I did do that, I got big results in part 1. And that's despite the fact that no trades were actually taken early on. So I think the earliest trade was like 12:30 or 1 o'clock in the afternoon, despite being at my computer for 10 o'clock in the morning, the latest. More than twice as profitable in part 1 compared to part 2. And I know that sounds strange because part 1 had all the profits and part 2 had 0 profits, but this is actually doesn't land on the 28th. So I started getting up later, a little before the 28th, hence the difference, the fact that it is twice as profitable. And then the second point is staying in winning trades longer. I noticed that in part 1, I was staying in winning trades for as long as 100 minutes and 120 minutes, as opposed to just a 60-minute and 70-minute max staying time in part 2. And then the third and final thing, which kind of ties into the second, is fewer episodes of cutting winners short. So the reason why I stayed in for less time in part 2 is simply because I cut the winners short. These weren't actually bona fide exits. The 100 and 120 minutes was because I was waiting for a specific target. I bailed on this 60-minute and 70-minute. And so there were some mistakes in part 1, like had two episodes within those 8 days, but I had 4 within the 9 days of part 2. So I see 2 main problems and 2 ways that I'm going to fix that. Getting up early is simple. You wouldn't think that it would make such a difference, but it does. I believe the hypothesis is that getting up and just getting your eyes on the charts, but sitting on your hands, starts to get your brain warmed up. So you get to see the charts for an hour or 2 or 3, and then you start trading. And this obviously did have a massive effect on my profitability. And a trader friend of mine actually mentioned this some years ago, and I dismissed it. But now I'm starting to dig into all the stats. So what I'm going to do is simply make sure that I'm at my desk by 10 o'clock with patience. That doesn't mean I start clicking away at 10, but get to the desk at 10 and then ease my way into the day. If I'm not at my desk by 10, I'm not going to trade this coming week, and we'll see what effect that has on my trading. Staying in winning trades longer. I've noticed that once I'm returning sort of 2R in a trade rather than the 3 and 4 that I'm looking for, based on the chart, obviously, it's not just a random 3 or 4, but I generally don't accept less than 3. I've noticed that when I'm up a certain amount, due to the withdrawal, as I've spoken about in the prior video, I just start to justify why a 2-to-1 is still great, and if it comes back in my face, I'm going to be down 1 instead of up 2R. So rather than ruminate and bathe in those thoughts, I'm simply just going to walk away. And if I walk away or go and do exercise or whatever I do and come back and see that I could have taken 2R, then it's a good trade, as long as I leave it to my target. And that's going to help with the third point about cutting winners short as well. So that's it. I just want to put it on record here so that everyone knows, whoever's tuning in. And I will be back. If not before, I'll definitely be back here on YouTube next week with the results. Whether it's profitable or not, obviously no one knows. But one thing's for sure, I'm going to hold for my targets, and I'm going to make sure I'm up and at the desk for 10 o'clock, Monday through Friday. And this will probably be the last week before Christmas. So let's make it a good one. So, as always, in your own trading and also in mine, let's just remember to dumb it down and follow the plan. See you all next time.